So yeah, really excited to get stuck in today because we're going to put Pega's first trade on. The whole theory of shorting is difficult because it's the opposite of what you've normally done.
Thank you so much for helping me place my first trade.
Now, what happens when it goes wrong? So we're going to go and teach people what is a long-short portfolio. What I want to do is put on a long-short trade with you, okay? Now, this takes a lot of the risk out of investing because you are hedged. So you're buying and shorting two different stocks in equal amounts, right? That's attempting to take the market risk out of the trade. It's not saying that I'm really bullish on the whole FTSE 100 or the whole S&P 500 going up. I've just got a particular strong opinion on one stock, and whether the market goes up or down, that stock is going to outperform another one, and that's called alpha. So why does a stock go up? What do you understand, Pega, as sort of the reason to hold stocks?
So I think two reasons. So the first of which is because their business performance is good, right? So they perform well. So they do these, investor reports, investor calls. And then the second one is sometimes the market just does weird things, right? So people will speculate, and I think sometimes people jump on the bandwagon a little bit. And then that may also impact the stock price.
So today it's good. We're going to stick with the fundamentals today. Having looked, last week we looked at sort of why to invest and how to invest. Today we are going to invest.
Okay, I'm ready.
Right. If the stocks behave very differently, right, then we might adjust the sizes of our long-short position. If you're long $10 million of a very defensive stock that doesn't move very much, right, and then you're short $10 million of a stock that goes crazy, then that's not going to work. Because one of them is going to go up and down a little bit, and one of them is going to be a lot more volatile. So your losses on one would be a lot more than your profit on the other. And that's what you're trying to do. You're trying to say, if the market goes up 1%, right, then you'll make money on your stock going up, and you'll lose money on your position that you're short of also going up.
So I should get comfortable with losing money as long as I'm making money.
Exactly. As long as the whole portfolio is making money, then it's okay for one to be in profit and one to be in loss. The whole theory of shorting is difficult because it's the opposite of what you've normally done. Right? Normally, you're trying to go long a stock and you're buying it low and selling it high. Simple as that. Yep. Shorting is the complete opposite. So do you want to have a go at what you think shorting might be?
Sell it high and then buy it low?
Perfect.
Is that right?
It's simply the reverse of what you're normally trying to do. Selling a stock or index high, buying it back lower. But you can't sell something you don't own. So we're going to take the example of rugby balls. Remember during COVID, we had a shortage of a lot of things. So in this example, we're going to pretend that we've got a shortage of rugby balls.
Okay.
So let's say, how much roughly do you think that ball's worth?
I think about maybe 20 pounds.
20 pounds. Excellent. Let's say that during a circumstance like COVID, where there's a huge shortage of rugby balls, Battersea are desperately needing to get more rugby balls. So they're prepared to pay £40 a ball.
All right, that's double the price.
Double the price. You've actually seen that there might be an offer in Sports Direct next week for a discount because they're just about to get new balls delivered. But Battersea need their balls this week. So you own one and I own one. What are you going to do with that one if they're offering you £40 straight away?
Well, if I don't need my ball until the sale goes, I will sell my ball for £40 to Battersea.
So that's done.
And
so
then
you've sold yours.
When the big sale is on at Sports Direct, I'll then stock up on new rugby balls and create a shortage in the market.
And now and do it all over again. But in the short term, you can only sell one. You know I'm going on holiday for 2 weeks. I'm unaware they're trying to buy, right? I've bought this ball for 20 quid and I've got it sitting at home. So what could you offer me, knowing I'm going on holiday for 2 weeks? By the time I'm back, you could go into Sports Direct and buy one for £15. What might you say to me before I go on holiday?
Oh, Rich, I know you're going on holiday. Do you know we're totally out of rugby balls at home, and we could really use borrow yours if you don't mind while you're away.
Here, £2. Okay, so you've borrowed that from me for £2, right? It's worth 20 in your mind. You actually know you can buy it back at 15 soon. So what do you do with that ball?
I also sell this to Battersea Ironsides.
So you've now sold that for 40. It wasn't yours to sell. You just borrowed it from me. So now you've got something that you can sell, but you've got to give it back at some point.
Yes.
So you've borrowed it for a certain amount of time because you think you can go into Sports Direct in the future, buy it back for cheaper, and your P&L is you buy a new one back for 15, you give me 2, so it's cost you 17, so you've made a profit of 23.
Yeah.
That's it. That's shorting.
What a great deal. But how do I find the people to borrow from? So
that's lucky. So IG platform does that for you.
Okay.
Right? For the vast majority of the time. You do have to check if it's borrowable, but generally these things cost, maybe between 1% to 4% a year. Now, what happens when it goes wrong? Let's say you really wanted to go to Oasis. What would you be prepared to pay if you were a massive fan?
Oh, I think if I were a massive fan, 1,000 definitely is worth it. This might be the last time.
I'm going to promise you a ticket for 1,000.
Okay.
Okay. Now, I don't have a ticket, but I'm sure I'll be able to get one in the market. But of course, there's a specific expiry date.
Yes.
Right? I have to get my hands on that ticket before the concert because I promise you one. We're now in a contract for me to provide a ticket to you, and you've given me 1,000. I'm hoping to go and get it for 600. I can't find one anywhere. There's nowhere in the world I can find a ticket for Oasis without paying 1,500. So I go into the market, I pay the 1,500, I've got a contractual obligation, and I give it to you and I take a loss of 500. That's when shorting goes wrong. Okay?
Okay.
So today we are going to put on a trade where you're going to buy a stock that you hope goes up, and then you're going to short a stock that you hope doesn't go up as much.
Okay.
Or in a perfect world, your long goes up and your short goes down.
Okay. But I'm not going to get too hung up as long as my alpha is positive.
Ooh,
right?
We're getting all the terminology as well,
Okay.
Pega. So that's exactly right. You're looking to make alpha across the net alpha across the two positions. Now, I've asked you to do some homework looking at airlines. Is that correct?
Yes.
So the idea behind this is Pega's going to do some fundamental research and analysis on her views of airlines. So we're going to look at 5 different segments across a certain number of airlines, right? It's as simple as this. Do you want to give us a rundown of your analysis there? What's the winner? How does that all look?
So EasyJet came out on top.
Right. So then EasyJet is going to be our long of the week.
Okay.
Happy with that?
Yes.
Excellent. And what about the worst? What was the worst performer out of the lot? It was
Delta.
Right, so we need to long EasyJet and go short on Delta. So we are going to invest in EasyJet for you, and we're going to buy £5,000 worth of EasyJet.
Okay.
Okay. So on spread betting, you can now have a look on the screen. This is your portfolio, has £10,000 in it. Okay, so we got 10,000 overall.
Yep.
And then this is a spread betting account. So we're going to go long. What's that going to be then? £5,000. It's about £10 a point. That's going to be 4,950
Okay.
long of EasyJet, okay? Happy at 495?
I'm ready.
Ooh, your first ever trade. Boom.
Done.
Right. So there's us long. £10 a point at 495. And we just check in the bottom bar that that is position on. And then Delta Airlines, we have to put our short on in the same size, right? So Delta Airlines, of course, is in dollars. So we've got to also make the FX. Luckily, the platform does that for you.
Great.
So that's £1 a point on Delta, right, is going to be that 5,000 notional.
Okay.
However, it's an all sessions stock, and there's a little bit of a wide spread at the moment. So what we're going to do is we're going to put that in as an order for you, and we're going to watch it carefully over the next few hours, and we're going to make sure it opens. So here we go. We're going to sell £1 a point at a level of 51, and you get to choose the price. So at the moment, somewhere between 51.24 and 51.59. The higher the better, because you are shorting it. So this is like the rugby ball being worth £40.
Okay.
The higher the better that you put on your short position.
So should I do 51.50?
51.50? Yeah, let's try that. So there we go. Expiry good till cancelled. Right, we're putting that on.
Okay.
Place new order, you ready?
I'm ready.
So that's going to sit there, right? And then hopefully on the US Open or before we get done. And then we come down to their position. So you're going to have two positions in there. One position open, one working order. And there we go.
Thank you so much for helping me place my first trade.
We are most welcome to come and join us again next week.
Fantastic.
And when, you know, there'll be another exciting installment, you're going to be putting on your second trade. And then we're going to build up that long short portfolio over the next 8 weeks. And yeah, very excited.